Cameron, hi. Good to have you on the show. And it clearly seems like markets think that what we had last month in terms of all the geopolitical tensions, the start of the month, seems to be the end of it all. And all is hunky-dory, at least going by the price action.
Well, we do seem to be in a period which fits the definition of that they frequently use for the weather in New England, which is if you don't like it, wait a couple of hours. But it's very much week to week at the moment, certainly in terms of flows. And sentiment is very, very quick to change. I would characterize it as somewhat brittle. That said, there's definitely been a modest rotation in favor of emerging markets. We're seeing much stronger flows into the diversified gem funds. And in a market where, frankly, I think most people are at least trying to work out what safe looks like. It hasn't been a bad period for India, while flows into dedicated India funds remains, well below the kind of levels we saw in 2023-24. They've been consistently positive now for over 2 months. And India's combination of defensive characteristics and still strong growth is definitely making it one of the more consistent destinations for mutual fund flows.
Cameron, what is the importance of the dollar index in the overall scheme of things? In the long term, if dollar remains below 100, could that really open the floodgate of further inflows into emerging markets?
Well, certainly the health of the dollar and the impact that U.S. monetary and fiscal policy are going to have is something that people are paying a lot of attention to. I heard some discussion before I joined you about indexes here hitting or testing record highs. But what we've been seeing in the flows is while there's a fairly strong support for U.S. equity markets, especially through the diversified funds, it isn't a particularly strong conviction. Allocations towards the U.S. have been trending downwards recently. We've noticed that foreign domiciled U.S. equity and bond funds have lost a lot of momentum and have even seen periods of outflows. So the dollar index is definitely something to watch. Sentiment towards the U.S. is not in a particularly strong place, especially given what you might expect in an uncertain world where people would historically be pivoting to the U.S.
So, Cameron, just to connect the dots here, if you look at the flows normally come to emerging markets when there is weakness in the dollar index and when there is weakness in the local markets, which is the US market, the European market. We are staring at a situation where dollar is weak and US markets are strong. Is that a good enough setup for emerging markets to invite flows, or it's a matter of time flows will start going back to America?
I think that the strength of the U.S. market certainly doesn't feel terribly strong to me, despite the lofty numbers of some of the key indexes. And we've been seeing, as I said, a modest but appreciable rotation towards emerging markets in recent weeks. So in as much as anything is certain at the moment, which is almost nothing, I do think that emerging markets are getting a closer, more positive look again. There's certainly a feeling that the dollar index is going to remain under pressure. If the tax bill goes through, we're looking at another tailwind for deficits here. So I don't think you're going to see sort of full-on shifts. So that just isn't sort of the pattern we've been seeing in flows. But I certainly think that people are going to start to add to their emerging markets exposure during the summer.
Yeah, and that's quite telling, the way some of the markets like Brazil have been moving. But Cameron, good to have you on the show. Thank you so much for your time today.
Not at all. Take care.
Well, let's move on and let's talk about what the global commentary has been over the weekend. Shrishti is here with those data points.
Well, yes, first up we have the